Well, chip stocks leading the rally this year, and so far the sector overtaking software and being the heaviest weighted sector in the S&P 500. To break it all down, where you can cash in on the AI hype, we want to bring in Youngyu Ma, BMO Wealth Management U.S. Chief Investment Officer here. Youngyu, it's great to see you again. So let's talk about some of that excitement that we're seeing play out from a broader markets perspective here. When we take a look at the AI trade, it seemed to be losing a bit of steam going back to last week when you saw the reaction to Dell, when we heard about some of the concerns here from Salesforce and the fact that, hey, maybe demand isn't going to be living up to expectations here, at least in the short term. And now here we are Monday morning, and we're seeing that excitement return once again when it comes to the AI trade. What are you seeing just in terms of whether or not you think this rally has legs?
Yeah, thanks, Sean. It's great to be here. We do think it has legs, but we do think the enthusiasm for AI is going to come and go in waves. And when the news and new information comes out that sort of sparks new investor enthusiasm or renewed enthusiasm, it's very difficult to predict. But over the medium term, we do think that the productivity gains and the benefits from AI will be apparent enough that the rally can continue and continue to increase spending in these areas that will help the companies that feed into this. So overall, we're positive on AI, but we do think it's going to be a choppy path forward.
And so all of these things considered, where do you think we'll continue to see overcrowding in certain trades or even some profit taking in the near term?
Yeah, in the very short term, it's a little bit difficult to game. I think that's a tricky play here because there is a lot of enthusiasm that's already baked into some of these AI stocks here. And I do think that the trends for AI are positive in the medium term. But, when there's too much froth and when that sort of deflates a little bit and then reflates, it's very difficult to play out here. But we do think the medium term is quite favorable.
And I want to bring up our chart of the day from our morning brief newsletter here this morning. And it's talking about the fact that broadening out that we had seen very briefly earlier this year and also at the end of last year, that's starting to lag just a bit, and especially lagged in May. It's lagged over the last several weeks. When you take a look at that, some out there, some strategists have been saying that, hey, this is a bit worrisome given the calls that we started the year with and the importance here in order to see more of that rotation. Are you at all concerned by some of the patterns that we've been seeing?
It is concerning. It's certainly concerning in the short term that we're seeing a relatively narrow market, and that narrowness has been increasing recently and really driven by fewer stocks. So, that's not what you want to see for market health. We have seen, at least recently, last week as well, a little bit of pickup in the small caps, which was nice to see. So there are a few areas of this we're monitoring, but we don't want to see much more deterioration from here in terms of that breadth of the market and the sort of underlying fundamentals of the rally. So it is concerning, but it's not something that right now would lead us to shy away from the market overall.
As you kind of think and assess the earnings season that we've in large part made through, I mean, there's a couple more retail companies that are going to trickle out over the course of this week and a few B2B companies, CrowdStrike later on this week as well. All of those things considered, looking back at how some of the companies that have missed on earnings have been punished more than the historical averages, and even those that have topped out, they're not getting rewarded to the same extent that we've seen before. What's that set up for the rest of the year as we go through the future earnings cycles?
Yeah, there was just a lot of enthusiasm coming into the earnings season. And as you mentioned, you saw huge punishments for companies that didn't meet or exceed expectations by a sufficient amount. I think it depends when we go into the next earnings cycle, how it plays out going into them. Is there a big enthusiasm ramp up pre-earnings cycle that then the earnings announcements really have to meet and exceed, or do we see some muted expectations going in? So I think it's really about where we started the cycle and then how things play out, and you have to take those two things together. So I think it remains to be seen what the next month or two will be like if we get a renewed bout of enthusiasm that could set us up for very high expectations going into the next earnings cycle.
Is it clear, though, that artificial intelligence can't just be the silver bullet that gets deployed by companies at this juncture?
Well, I think artificial intelligence is going to be a big productivity enhancer over the medium term. But when that actually shows up in the data is going to be quite some time, probably a 2025 story. Is it a silver bullet? It can be a silver bullet, but that's something that plays out over time. That's not going to be a silver bullet over the next month or two. So, we're going to get data, we're going to get information. We saw another announcement by NVIDIA recently about the launch of some of its new and enhanced chips. So this data and information is going to come and go in waves, and that's going to create different bouts of enthusiasm in the market. In the medium term, we're very optimistic. In the short term, it's just a lot of choppiness and inflation and deflation that we have to deal with in the markets.
Young-Yu Ma, BMO Wealth Management U.S. Chief Investment Officer. Thanks so much for kicking off the week with us.
Thanks, Brad.